Hello again, everyone. This is Joe Hentges with Beyond the Chart, your source for exceptional video analysis of stocks, ETFs, and indices so you can become a better trader. Welcome back. Today we're going to take a look at a trade from the Trade Ideas page that is available to my insider members from June 23rd on Seagate Technology. So here you see the chart of Seagate. Here's where we're talking about this little scenario right in here. And right here is where and how I describe this exact copy comes right off the page of the Trade Ideas page on the website. So on the morning of June 23rd, on this day, I said, okay, we've got a new trade idea. If it breaks 5302 in here, which is the low of this white bar right here, okay? If it breaks that and it closes below the 10 exponential moving average, which is the blue line, okay? I'm saying, go ahead and enter July 55 puts. So they would be in the money. Now, the interesting thing about this scenario in here, we had some consolidation going on. This little kind of a pennant formation in here. But all the moving averages were aligned to the downside. The 10, which is kind of my trigger line, was below the 21 simple, below the 55 simple, and the 233-day simple. Now, I use Fibonacci numbers for all my moving averages, the simple moving averages, and then I use the 10 exponential as the trigger line, okay? So I was looking for a break of this low and a close at that day to enter. So we entered at the close of that day in those puts, and I conservatively put it into the Trade Ideas at the asking price, $3.15 or $315. And because we were doing 3 of them, there was $945 on this trade. Now, this came down and within 2 days got a close right here outside the Keltner channels. The dotted lines are my Keltner channels that I've got on here. And so we got a close out there and said, okay, got it nice and quick. It's outside the Keltner channels. I'm going to go ahead and grab it. So went ahead and did, exiting at the bid, which, so I've got to cover the spread between the bid and asked in there. But, the trade did that, $4.50. So what ended up profiting was up $405 for the trade, 43% profit in 2 trading days. Very, very good. Very happy with that. Now, here's the thing. Look what we left on the table. And, you never know. And let me show you why. Let me go back to this. Okay, when I look back at previous history, as I was looking to put this trade on, I saw that whenever it got outside the Keltner channels, here since the first of the year anyway, in 2015, it didn't stay outside the Keltner channel very long. It started chopping and pulled back. Got outside the Keltner channels, started chopping, pulled back. Did not get back outside the Keltner channels, did not get outside the Keltner channels. So when I saw this, I thought, okay, there's no guarantee. Now, 2020 hindsight, what would I do differently? 2020 hindsight, what we'd do is we'd sell 2 and let the other one ride, okay? And, there's a wide variety of ways to let the other one ride. You can always just, let me get off of this crosshairs. You can have a stop that could be, I'll exit when I get a close above the prior day high, and that would have happened right here at 48.15. Instead of getting out at 50.69, you could say, well, I'll exit if it breaks the a 2-day high right in here. I'll exit if it closes above a 2-day high. I mean, there's just a wide variety of things you can do to ride down, and nothing's ever going to guarantee that it's always going to work perfectly every time. That's just not going to happen. But you can let part of your position ride on down. In this case, I decided to go ahead and grab with all 3 and exited, and we ended up having 43% profit in 2 trading days. So anyway, there's an example of how you can do that, and especially when all the stars align with the moving averages aligned to the downside. All right, this has been Joe for Beyond the Chart. Hope you found that helpful. I'll talk to you soon.